Hello everyone and welcome to the Nomad Hedge. In today's video, we're going to take a look at Bitcoin from a technical perspective and highlight some of the key levels I think are important to watch in the coming days and even weeks ahead. But first, if you're new here, consider subscribing to this channel and hit that bell notification to stay up to date whenever a new video is released. So let's take a look at Bitcoin here on a daily chart just to recap what's happened so far. Now, Bitcoin started consolidating here in early January and has been making higher lows and higher highs ever since. So over time, shorters following Bitcoin saw that a bear flag was in the making, and this bear flag was then successfully broken here in late April this year. Now, Bitcoin tried for a short period of time to get above this trend line, but obviously that failed and the price of Bitcoin continued to drop here and fell intraday as low as $25,400. But then buyers managed to step up here and supported up to $28,700, which also coincided with this Fibonacci level of 0.618. So let's take a look at Bitcoin here on a weekly chart just to get a perspective of a bigger picture. Now, Bitcoin has been holding this line of support going back to January of 2021. Now, a break below this 30,000 level would mean that Bitcoin could potentially fall to 20,000 because 20,000 has acted as resistance previously. So the bulls needs to make sure that we're above 30,000 or the bears could take it down to 20,000. So what would be the catalyst for Bitcoin to actually make it down to 20,000? Now, in my opinion, it all has to do with Fed policy because right now we are in a tightening cycle, which means that the Federal Reserve will continue to raise interest rates. They've completed a taper and they're soon also going to begin reducing their balance sheet starting in June this year. Now, they're going to speed that up in August or September as well, so keep that in mind. So with that said, you don't have to fight the Fed. In fact, everything they're doing right now is affecting the behavior of the markets because the Fed's goal is to lower inflation, thereby removing liquidity from the markets. Now, ultimately, what this all means is that the cost of money is going up. Now, there's also a bull case for Bitcoin. Don't get me wrong. I see three possible scenarios that could happen from here. Number one, the Fed could flip-flop entirely. Or number two, they could pivot at some point. Or number three has to do if the dollar starts to weaken. Now, if the Fed were to actually flip-flop, that would mean they would slash rates down back to zero again and launch a new round of QE. We have seen that the Federal Reserve have actually flip-flopped before, and so it would be no surprise if they would do it again. The second scenario would be if the Fed pivots at some point, which means they could be happy with the neutral stance of a Fed funds target rate at around 2 or 2.5%. The market could absorb that as good news and we could see higher prices from there on. The last scenario would be if the dollar starts to weaken. Now, I'm not going to go into full details here, but typically a strong US dollar puts a lot of pressure on US equities as well as the crypto markets in general. So if the dollar starts to weaken from here, we could potentially see the price of Bitcoin goes higher as a hedge against a weakening dollar. So to wrap up this weekly chart, keep a close eye on Fed policies. Basically, what this means is an aggressive Fed equals further downside pressure in the price of Bitcoin. And just one last notice, Bitcoin has now been down for 8 weeks in a row, which is the first time in its BTC history. We are now moving on to a monthly chart of Bitcoin, which shows us the complete history of BTC going all the way back to July of 2010. I want you to pay attention to all the cup bases Bitcoin has built ever since its inception. Now, every time Bitcoin built a base, it rallied above it and stayed above it. That's the key here. Now, take a look at the most recent cup here from December of 2017 all the way up to December of 2020. Now, after that, Bitcoin made new all-time highs in early 2020 and reached almost $69,000 in November of 2021. So we can see that Bitcoin formed a double top here but failed to make new highs after that. Now, what's interesting is that Bitcoin never undercut its previous base. Again, each time a new cup was formed, Bitcoin stayed above and rallied higher. But what would happen if Bitcoin actually undercut its previous base? And more importantly, what would warrant such an event? Now, in technical analysis, each new stage of consolidation gets weaker and prone to breakout failure the more bases it builds on top of the previous one. So in other words, Bitcoin could actually have reached its peak here, and it looks so much so. For now, on a monthly chart, we can see that Bitcoin has built 3 to 4 cup bases. Historical data actually shows that there's a 70 to 80% chance of breakout failure after the third or fourth base. So that's just something to think about. So the scenario is either Bitcoin rallies from here and builds another cup, or it will simply undercut the previous one. But if we were to undercut the previous base, the downside potential entails a drop to anywhere from $20,000 all the way down to $3,000. Now, there's also a possibility that we could end up in between this range as well. This is why the level of support at 20,000 is so important, as I showed in the weekly chart. If we fail this line of support, it could literally be a bloodbath from here. So before we round up this video, I want you to take a look at a monthly monthly chart of Amazon going back to pre-2000 era, before it double topped here and fell almost 95% from its absolute high to its absolute low. Now take a look at the similarities here where we are today, and Bitcoin has formed the exact same topping pattern, and it looks to be going lower from here, just like Amazon did back in the days. So if history doesn't repeat, it definitely rhymes, and in this case Bitcoin's chart looks almost similar to Amazon back in the late 90s. I'm not saying this will ultimately happen, although it gives you a perspective that things can turn around quickly, unexpectedly, and it can get very ugly. But the good news is Amazon then rallied from its low and is almost up 33,000% till today. So who wouldn't want to buy Bitcoin at a much lower price, especially if you missed the recent bull market in 2020? So to conclude this video, keep a close eye on that sub 20,000 level, and if we undercut the previous month, then the potential for downside price action is highly likely. So the Fed is planning to hike rates with 50 basis points in June and July, and keep an eye on that quantitative tightening or balance sheet reduction beginning in June as well. For the bull case, watch that DXY or US dollar index. If we fail to break above previous resistance levels and make lower lows from here, that could spell a tailwind for stocks and cryptos. Okay guys, that was it for today's video. I want to thank you, the viewer, and I would also appreciate if you could hit that like button because more people will be able to see it. And feel free to leave a comment below. Have a great one, and I'll see you in the next video. Take care.